Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for June 4th, 2021. The summer is here, and the pandemic seems to be subsiding, at least in the United States, and overall things seem to be looking up. So today, as always, we're going to look at stocks as they approach new records, and NASDAQ seems to be leading. We'll look at two really cool examples. I think I'll start doing this more often. Basically, I'm telling you what the technique is, what the trading technique is. I trade exactly like that. And the psychology, how to deal with psychology. So we're going to look at two examples, Freeport-McMoran and the RealReal examples. Junk debt is approaching new records. High-grade bonds are also bouncing. This will most likely cause interest rates to come down and speculation in real estate to continue. Gold and Bitcoin both are stuck between bullish and bearish levels as dollar attempts to hold the January 6th insurrection lows. I also have two paid newsletters. One is called the Elite newsletter, one is called the Speculator. Don't be scared by those names, it's just a name. It happens that I trade ETFs and large caps mostly in the Elite, and we break what's called we trade what's called breakouts in a Speculator newsletter. So if you're interested, stay tuned. I will show you some examples. In fact, some of these examples will be of the speculative stocks. So let's get right to it. S&P 500 is again approaching new all-time records. Not really different from what happened last week. Very briefly, I will again explain my thinking on how I trade. If we really go back a while back, so here's February 2019, and you can see this breakout with an arrow above those blue support resistance lines. Now, if you're interested in these lines and you can have them on your chart, click below in the description of the video, and it will take you to the correct website. My indicators are also named after my website. So anyways, these lines, what they do is they show what's called support and resistance. So these concepts are, I would say, by far the most helpful to me personally while trading. So in this alert, February 2019, the security closed above the blue line. It's pretty obvious, and you can see that it never really touched it again until the pandemic was declared or started. So February 25th, right there where I'm hovering, it is clearly obvious where I would have exited. I would have exited here. I sent this to my subscribers. I closed all of my stocks in the retirement portfolios, and I set from February 25th until right there April 29th 2020. If you guys remember, we had a pandemic here in America. The things is just absolutely wild to me. Things are just returning back to normal, like nothing happened. So please remember that we did have this pretty crazy and wild times, and we set it out. So from February 25th, where I'm hovering, we exited, and we didn't do anything until April 29th of 2020, at which point we were like, oh cool, let's start buying. So we started buying first into retirement portfolio, and then also of course into the actual trading portfolio. And you can see that the latest touch was right there on 15th of June 2020 of the support resistance blue line, and at that point that was the last opportunity where I would even conceivably think about buying. At this point I'm basically holding. So if I bought back here in April, I'm holding and I'm doing nothing, and I'm still trailing. In other words, I'm advancing my stop where I would exit in case this thing collapses at the blue support resistance line as the stock, in this case S&P 500, moves higher. So it's been moving higher for the past a little bit over a year already. and you can see that this just keeps going. So right now we're still holding this position because there was not yet a touch of the blue line. You see, if there was something similar to what I'm showing here in February 2020, then we would exit, but it hasn't yet occurred. So we will need to see how far this will push. It could push higher significantly. We don't know how high the stock market will go. You can guess, and other people can also guess, but overall, truly nobody really knows. So we're betting on the probability, and the probability back here in April was very high, and so we started buying this. And right now the probability of us holding this stock basically is very high, because there's no point. I wouldn't want to buy right now, nor I would want to sell right now. I would want to just hold my open position. Here's Dow Jones, also approaching new records. It's currently at 3,400, and as I said before, I don't see why it cannot double or triple from here. It went, from the lows, and we can actually find out how much it was. I mean, it basically doubled from the lows in March of 2020. Our alerts and opportunities happened in April, May, and June of last year, right there where I'm hovering. And what's cool is that it's clearly obvious. So once again, once you have my indicators, it will be clearly obvious for your trading as well. So we're sitting and holding. Again, we're trailing at the blue support resistance line, and you can see it hasn't yet been hit. It might eventually will be hit, or rather, it absolutely will be hit sometime in the future. Once again, we don't know when. This could be another 2-3 days of advance, or we can see another 2, 3, 4, 5, 10 years of advance. So the risk of us being stopped out prematurely is much greater than the risk of we want to make sure that we capture the move. So if this thing continues, we want to be in it, right? Here's NASDAQ QQQ. So notice this action today. It gapped up. It's kind of, I'm going to turn off the indicators for a second, but you can see it gapped up here. So it's a strong buying pressure and very strong green candlestick approaching new record. So good news overall for the stock market, with technology finally kind of improving. But overall they're very similar, S&P and NASDAQ and Dow Jones. So if you buy one, might as well buy the other. Here's a breakout for QQQ back in April of 2020. Small cap side WM also pretty similar to other major indices. Latest opportunity for this one did occur a little bit later than the other stocks. For Dow Jones and S&P, the breakouts occurred in April, May, June of last year, but we had also an opportunity for small caps here back in September. So overall, very similar patterns, but sometimes we can play off of these minor differences and get into different positions this way. Okay, and here what I wanted to show a couple of really cool examples of how I think, how I trade, and how you can trade the same general way. All you need is a set of these indicators, and you can again find out more by opening the description links below. You can also look it up online. My indicators are named after the website. So this Freeport-McMoran, it's a major mining, especially copper mining firm, and this one, the breakout here you can see occurred on 5th of June of last year, right there, 2020. How do I know it's a breakout? And additionally, it's what I would call a true breakout. So number one, what is a breakout? Number two, what is a true breakout? So number one, breakout is when a stock was below the blue line and now closed above it. So this blue line, again, it's support resistance lines calculated by the indicator. So once we see a close above it, like I'm showing here on the 5th of June, this is our signal to go ahead and buy. Now, what's a true breakout? A true breakout occurs when we see a stock that was below the yellow line. In other words, it was hitting 52-week lows. It was so bad. It was badly oversold, I would call it. And at this point, once it breaks out above the support resistance, we buy it. So notice that this trade would have just worked incredibly well. Remember that our stop is at the blue support resistance line. And we entered right there where I'm hovering on 5th of June 2000. We would have entered right there on June 2020 at about $10.70. Now notice where the price is right now. So this is one of those just home run trades that went as far as $45, and that is a 324% gain. So if you were able to get in June of 2020, you could buy options, and you can buy what's called a leap option. So a leap option is at least a year out, but better yet 2 years out. So if you were lucky enough to buy, let's say, 2022 options back then, as I always say, it's usually 3 times. So if your stock goes up, 100%, then the option usually goes up 300%. But in this case, it went up 320%. So most likely the option, if you bought it back here in June of 2020, is up 1,000%. So if you ever had 1,000% gain, go ahead and make a comment below. It's quite an interesting experience. Now notice again that on this chart, the blue support resistance line has not yet been hit. So if I entered back here in June, I would still be in this trade. Crazy as it sounds, right? It's been almost 2 years. So some of my trades would last that long, especially this just blockbuster kind of breakout trades. So this is a successful trade, and we get these types of breakouts at MasterCharts Trading quite often. So again, find out more. Here's one that we did. I wasn't, I don't think I sent any alerts, but it was on my radar, so to speak, because first of all, this is called the RealReal. It's a relatively new, I think it's a clothing brand, if I'm not mistaken. So where I'm hovering right there, I'm gonna put an arrow there. On the 18th of August 2020, so in the middle of a pandemic, a breakout occurred. So at this point, I'm like, okay, you need to think about buying it. You need to consider that it will continue higher, because this is a breakout, an honest to goodness breakout. If we did go ahead and buy it, this would have been a great decision, because it went up as high as, let me see how much it went up. It went up as high as 73%. And you had so many opportunities to, take profits, etc., and exit, that it's definitely a successful trade. And remember that your initial stop. So what does that mean, initial stop? Initial stop is what you do is when you buy. So you buy, let's say, right there on 18th of August. But where do you cry uncle? Where do you get out and say, okay, this is the end of my trade? You get out at the yellow line. Okay, so that's your stop. But once your target is reached, your target is, not that far. It's like that far. There's your target. Maybe right there. So, and I can explain how I calculate it. So you can turn on this indicator called average true range, and back here, see, on the 18th of August, this ATR thing. ATR is free, by the way. You can find, excuse me, sometimes it doesn't work. There, see, average true range. It's a free indicator. It's available everywhere. It just shows you how much does a stock move. And usually I set a target of two average true ranges. So if Back here it was $1. That means I would have said, okay, when the price moves about $2, I will say that my target is reached. So that's your target right there. And so once your target is reached, you take the stop that was way down below here and you move it to the blue line or to your entry, better yet. And then as the stock continues higher, you continuously advance. You move your stop higher and higher and higher. So eventually you get to this point right there where I'm hovering. I'm going to just zoom in where I'm hovering. Right there. So on the 24th of March, you would have been stopped out. Now, again, this is also psychological. So now I have to bring up some of the Wall Street animals. So we have the bulls, the bears, and we have the pigs, right? So what are the bulls? The bulls think stock will continue higher. In this case, the bulls were absolutely correct. Here on the 18th of August, the bulls were in control and they pushed the prices higher eventually. So the bears, who think that the stock would continue lower here, got trampled by bulls. Okay. Now, as some people are greedy and they had a really nice gain. How much gain did they have? As much as 70%, but at this point, see how much it was significant drop. So at the very least, on this date, on the 24th of March, I would have just exited at the very least. I would have taken profits up there already. But at this point, on the 24th of March, I would say that's it. That I don't want to hold the stock anymore because my position is in danger of turning from positive to negative, and you never want to do that. It is again very, very bad for you. Now it's again bad for your wallet, but it's even worse for your psychology. So you do not want to have a positive transaction turn into a negative. Right? It's extremely weighing on the person. So maybe you have entered here again, maybe not. We don't know. Or rather, most likely I would have entered here again. So, but you can see that at this point I would have said, okay, the target is most likely not reached. Maybe it was reached. Let's see if it was reached. So let's say I entered back here again. I decided to re-enter. So I exited my previous position and decided to re-enter on the 25th of March. The average true range back then was about $1.90. So I need my stock to move about $4. Did it move $4? Yes, it moved $4. It moved $4.29. So at this point, right there where I'm hovering on the 29th of April, I would have exited this trade, or rather, I would have at least advanced my stop from the yellow line. I would have advanced it to entry at this point on the 29th of April. So when the stock dropped on the 6th of May, I would have been stopped out again. So at this point, I would have no positions, okay? And that's a good thing because you see in a couple of days we had this collapse. And once the stock collapses below the yellow line, I will consider it to be in a downtrend. It is now bearish. In other words, the bears are now in control. And the bulls, who were preponderant back here, got mauled by bears. Okay. Now, if you are a pig, so a pig is a very greedy kind of person. So let's say they entered, back here. Even better opportunity to enter was where I'm hovering, 3rd of November. But let's say they keep thinking that it's gonna go down. Keeps thinking that the stock will continue higher, and sometimes people, let their greed blind their technical analysis. So technical analysis tells you get out, quickly get out. But people don't do that sometimes. And so what I'm trying to explain here is this stock at this point, see how it collapsed towards the yellow line and then now it bounced towards the red line. So it is currently perfectly positioned to be shorted. I don't normally short but if I did, I would have done this. So I would have shorted right now with a stop above the blue support resistance. Okay, so if I'm correct and it's gonna continue low from here, those the bulls will get worse and worse mauled by bears. Okay, so you need to be very flexible, and you need to avoid being a pig, basically. So being flexible meaning that back here I was very bullish. Back in November, back in August of 2020, I was bullish on this stock. But then I changed my mind, you see, and now I'm bearish on this stock. See, this is flexibility. If I was unflexible, I would say, no, I believe in the stock because, I don't know, there is some sort of a, maybe we can find out if there are any price to earnings. Let me see, somehow the chart is not responding, but it's okay. I mean, I'm sure we can, I don't have any earnings on this chart, but if earnings were there, maybe it would show bad earnings. Okay, so once again, flexibility, technique, correct technique is very easy. And I have a video, you can follow along, or you can just sign up. So another thing is we are working on a new service at MasterCharts Trading. I call it the Trader Academy. So I already have one student that is enrolled, and I want to kind of just tease it out there. So what we're going to have is we're going to have kind of like more interactive, and the price would be super cheap. So you can see my services are quite expensive, but if you are going to be learning from me, I will give you these indicators and newsletters for $10 a month. Okay, so if you have questions or if you're interested, go ahead and come over to contact and send me a message, and I will explain how it works. You can see that it's not even listed yet. So this is the Trading Academy kind of new thing that I'm trying to introduce, and this is purely to help other traders, because I'm not gonna really make any money. $10 per month will barely cover my hosting costs. So it's purely for to help the community, to help new traders, and some of the more experienced traders also. I mean, really, people need sometimes minor pointers, and they become extremely profitable. Extremely. I mean, hundreds of %. Okay, so send me a message if you're interested, and then we can talk. Okay, briefly, I'm running over a little bit. Junk bonds are again approaching new records. So as I keep saying, stocks and bonds correlate highly, and this is a correlation coefficient where I'm hovering, the red thing, and it's mostly positive. So occasionally it goes negative, but mostly junk bonds and stocks correlate highly. In other words, they move together in lockstep. If stocks move higher, junk bonds also do the same. I want to see junk bonds also make a new high, but they haven't yet. And so this sort of worries me. Additionally, you can see that the lines are getting closer and closer together. So we can also turn on the future projections. This is a new product here, indicator 6.0, and you can see that the future projection, it gets even closer. So we're looking at a very narrow trading range, and a narrow trading range implies that we can see a trend change relatively easily, because it will take less effort for the price to get to the bearish levels, which are not that far. You see this yellow line, that's a bearish level. Before this, see how far the yellow line was? It's super far away. So what this shows us is that we need to be open-minded about the possibility of stock market also collapsing. If junk bonds don't make new high, and if junk bonds for some reason decide to move lower, it's possible that stocks will also follow it lower. I cannot exclude that possibility, you see. All signs and all evidence is pointing towards increase in prices of stocks and junk bonds, but there is still a chance that I may be wrong. And here's TLT Treasuries. So TLT treasuries are in a downtrend. You can see downward facing arrows, actual alerts to my subscribers. If you have a sophisticated account where you can buy puts, or you can actually buy inverse ETFs as well on the TLT, buying puts implies that you are making a bearish bet. You think that the bears will be mauling bulls. Now, currently, what we're seeing is a what is called a bear market rally. So since the stock, in this case TLT, is in a downtrend, it's in a bear market, it is currently experiencing a rally. It's going up, but it is called a bear market rally because it's counter trend, it's against the trend. So once it gets to this red line, this red line is basically support resistance. So it's currently at 147.84. If it gets there, I would short it, just like we did before. But again, we need to look at price action as well. Right this instant, you can see TLT really strongly gained today. So this weak resistance at the yellow line, not unlikely to hold. Most likely we're going to continue higher. Here's 10-year Treasury bond, Treasury note yield. So as TLT and other bonds continue higher, yield continues lower. They are opposite. They move opposite to one another. So lower yields translate into lower prices on mortgages. There was a breakout in prices of mortgages where I'm hovering right there in February of this year, and mortgages and other interest rates, loans, for example, they now they ask for higher rates. But as the bonds are enjoying their relief rally, we're seeing a continuation of note yield continue lower. So I think we can easily see a decrease in yield of about 15%, and at that point we'll see if the bonds, because at that point the bonds would be most likely by the good place to be shorted. So let's look towards July, August, see where this goes, basically. But what this shows is, this is real estate, so IOIR, enough real estate investment trusts in here. So real estate investment trusts are enjoying obvious popularity, and you can see they're at 52-week highs, if maybe even all-time highs. Let me see if they're, and actually they are all-time highs. They're record highs. They outpaced previous highs from 2020. So we're again in uncharted territory regarding, at the very least, real estate. So real estate here in California, for example, we just had a house in Mountain View, basically in Bay Area, San Francisco, Silicon Valley, sell. Get this for $1 million over the asking price. So they were asking for $4 million and it sold for like 5 something. Now that's a lot of money. All right, so what does that mean? That means that if the interest rates continue to come down, most likely the real estate prices will continue to increase. So I don't see any drags on the real estate prices yet. Okay, finally gold. So here's gold on the daily time frame. All of my stocks are on the daily time frame. Now it's really stuck between the bullish and bearish levels. So I'm really, I really don't care which way it's gonna go, because I can either buy calls. If it goes higher towards the bullish levels, I will buy calls. In other words, I think it will be, I will make a bullish bet. But if it drops towards 1829 and closes below it, I will sell short. In other words, or I can buy puts. So I will either place a bearish bet here once it gets to 1829, where I'm hovering, or I will place a bullish bet once it gets to 1933. I am very, I don't care which way it's gonna go. See, the thing about difference between trading and investing is that I have really very little emotional attachment to what it is that I'm trading. I'm more interested in being on the correct side of the trade. So if it goes higher, I will be running with the bulls. So if it continues lower, I'll be running with the bears. You see, I'm undecided. I am flexible. I don't really have an opinion. I only follow the analysis. Now, if that doesn't make sense, please send me a message. Or you can actually make a comment as well. Please make a comment. Here's dollar briefly. So the reason for this whole hoopla with gold is because dollar was kind of gaining and it was weighing on gold, but then in March, April of this year, it just collapsed. So it's again approaching the January 6th insurrection lows. Is it gonna hit new lows? It's possible. Can project into the future. So the dollar looks very hopeful for gold bears. Gold bear meaning that I think that the gold will continue lower. So and you can see that the bullish levels for the dollar just got even closer, you see. And projecting them into the future with this 6.0 indicator, you can see that they're even closer in the future. So looks like July is going to get pretty interesting. Unless we make a new low. So if it makes a new low, then this future projection is meaningless. Okay, so as of right now, we're looking at July for something to resolve. But again, if it makes a new low, then all bets are off. Most likely that would imply gold will continue higher. Most likely then we're going to see new highs for gold. Okay, so again, notice my thinking, notice my psychology. I am very flexible and I really don't care which way it's going to go. We simply want to make money. Finally, Bitcoin doing exactly the same thing as gold. It's stuck between bullish and bearish levels. So not much we can do at this point. I would have no positions at this time, zero. I have no opinion on Bitcoin currently. All right, head over to MasterChartsTrading.com, click on products and sign up for one of my products. So number one, I have the most important product is the trading indicators, which are these 4 lines: green, blue, red, and yellow line. They show support, resistance. You can trade with them successfully and make tons of money. I have also newsletters. So I have 2 newsletters. One is called Elite newsletter, one is called Stock Speculator. In those newsletters, we cover different stocks and different ETFs. So in Elite, mostly large cap and ETFs are covered. In the Speculator, mostly breakout type of patterns are covered. So we're going to be looking at those. And here's one. I wanted to kind of show you what the subscribers are getting. So let me see what's the symbol. So we trade all kinds of stocks. Here's one called Itaú Unibanco. So this is my position I bought myself right there on the 20th of May. I bought calls. In other words, I think that we're going to see an up move of the stock. So I bought calls and I bought them at 47 cents each. They're currently 87 cents each. They're basically doubled. In 5 to 10 days basically. So this looks like a very promising pattern, and this is a breakout. You see, this is the breakout pattern that I referred to. The stock was below the yellow line sometime in the past, and now it's above the blue line. So this is a breakout stock, and this is what we trade in the Speculator newsletter. So sign up for one of the products. You will not be disappointed. Again, you have 7 days free trial. Also, we have Ultimate Bundle, which adds a stock screener, basic stock screener. You can find more stocks to trade if you're interested. Up to 250 large caps and ETFs are included in the basic. But if you really want to go even further, there's something called Advanced Stock Screener, which screens the entire universe of stocks. And all of these stock lists are available for you to screen. So I use pretty much exclusively this list, all stocks with options, and this is the list that we get our Speculator newsletter ideas from. Alright, that's it for this week's recap. Again, if you have any questions, please go to Master Charts Trading, click contact and send me a message. As I just mentioned, I'm going to be begin offering trading school or trading academy, whichever you want to call it. This is needs-based and a sliding scale pay. So if you have a small account and you're just starting out, pay a little bit. If you have a large account and you are more experienced, then pay a little bit more. I'm not asking for a lot of money. All right, let me know if you have any questions again, and thanks for watching. Bye-bye.